So you've already decided you're moving to Oceanside. You've already picked the neighborhood you want to be in, and you've been watching the market closely. Well, if you're moving from another area of California and you've lived in your home for a while, I'm going to share with you how you could save hundreds of dollars a month on your property taxes. Let's get started. Here's the thing. If you've owned your California property for quite a while, you're probably paying a fraction of what you'd pay if you bought that same house right now. Prop 13 has been protecting you for quite a while. And the thought of giving that up and instead of paying $500 a month towards your property taxes and instead paying $1,200 a month towards property taxes is one of the reasons a lot of people are still staying in their homes. What most people don't fully understand is that Prop 19 can allow you to take your current tax basis on your home and transfer it to your new replacement property that you're buying in Oceanside. It doesn't work for every buyer, it doesn't work always in full, and it doesn't work in every situation. In this video, I'm going to walk you through exactly how Prop 19 works, and we're going to walk through two real calculation examples so you can understand the math. We'll explain how the numbers work depending on which Oceanside neighborhood you're choosing. We're going to explain how the numbers change depending on which Oceanside neighborhood you're targeting, and explain the 3 lifetime limit and how that works if you've already used the benefit before. I'm Megan, a local Oceanside real estate agent and top relocation specialist here in North County. And I want to be upfront. I am not a tax advisor or a CPA, but I'm going to give you some basic, real examples so that you can take them to the experts who can walk you through the binding numbers before you decide to use Prop 19. To understand why Prop 19 matters, you have to understand what it replaced and what it was designed to solve. Before Prop 19, if you sold a home and bought a new one, the new house was reassessed at the current purchase price, and your tax basis jumped accordingly. This created a real problem, especially for older homeowners who were looking to relocate or downsize, but didn't want to give up their tax basis. It was essentially a financial penalty for moving. Prop 19, which took effect on April 1st, 2021, was designed to fix that. It essentially allows eligible homeowners to transfer the tax basis of their current California home to a new replacement home anywhere in the state of California. The basic eligibility requirements are straightforward. You must be at least 55 years old when your current home sells, and your current home and replacement home must be your primary residence. It doesn't work for vacation homes or investment properties. The replacement property must be constructed or purchased within 2 years of selling your original home, and you can only use the benefit up to 3 times in your lifetime. And here's where most people stop reading and assume that the benefit is simpler than it is. The transfer is not always 100%, and the neighborhood in Oceanside that you're buying in can affect what percentage you get to transfer. Now, let me walk you through the calculation because this is where the explanation of Prop 19 either gets really vague or totally lost in translation. I'm going to try to keep it as simple as possible. Now, there are 2 key numbers you need to understand. One is the sale price of your current property. That's what you got on market for your home. That's the full cash price of the original property. The second is your factored-based year value. That's the assessed value on your current tax bill. That's the low number that reflects what you paid decades ago, adjusted slightly for inflation. The rule under Prop 19 is this, that if your replacement home in Oceanside costs the same value or less than the home you just sold, your basis transfers at full value. Your Oceanside home is taxed on the same assessed value you've been paying for years. That is the best case scenario. If the replacement value of the home you're buying is more than the original home you sold, that's where the math changes. And this happens often for people who are moving from inland California to the coast. You take in your current tax basis and the difference between the replacement value and your original sales price. That sum becomes your new assessed value for your home in Oceanside. Now, let me show you both scenarios with real numbers of homes selling here in Oceanside. Example number 1, the blended calculation, where your replacement property costs more. You've owned your home for 25 years. Your factored base year value, or the assessed value on your tax bill, is $150,000. You then sell that property at $700,000. You decide to buy a property in Loma Alta at $950,000. The replacement property costs $250,000 more than the original home sold for. So the factored base year value of $150 is added to the gap between the $950,000 and the $700,000. So the gap of $250,000 plus the current assessed value of the home at $150,000 gives you a new assessed value of the home of $400,000. At a rough property tax rate of about 1.1%, that $400,000 assessed value is approximately $4,400 per year. Without Prop 19, your Oceanside home would be reassessed at the full value you paid of $950,000. That equates to taxes of $10,450 per year. So you are saving a little over $6,000 a month by being able to use your Prop 19 tax basis. While this is real money, this is not the same as your previous tax bill. And lots of buyers are very surprised when they get their tax bill and they think that it is. Example number 2, different buyer, different math. You live in your original home for 30 years. Your factored year base value is $250,000. You then sell that home for $1.1 million, and you decide to buy a home in Loma Alta for $950,000, which is less than what you sold your original home for. In this scenario, there is no gap. The replacement property costs less than the original home, which means that original $250,000 of factor year base value transfers directly. Your Oceanside home is taxed on $250,000 instead of $950,000. At 1.1%, that's only $2,750 for a coastal Oceanside home. This is the full transfer scenario, and it's available for buyers who have seen significant appreciation of their homes compared to what they're buying in Oceanside. So for people in higher value markets, the Bay Area, Los Angeles, and Orange County, selling that home and coming down to Oceanside and buying in Fire Mountain or Rancho Del Oro or other neighborhoods is going to save you significantly in yearly property taxes. It's worth running the actual numbers before you assume that the blended calculation applies to you. The size of the gap between what your original property sold for and what your replacement property in Oceanside is purchased at is the single most important variable in Prop 19. The bigger the gap, the more your assessed value increases. The smaller or same gap, you're able to transfer that exact tax basis to your new replacement property. This is why the neighborhood you choose in Oceanside isn't just a lifestyle decision, it's actually a tax decision. Now let's talk about timing, because there's a nuance in Prop 19 that some people don't know about until it's too late to act on it. The general rule is that your replacement property must be purchased within 2 years of selling your original property. But within that 2-year window, the timing of the purchase of the replacement property in relation to the sale can affect the calculation. If you buy your replacement property prior to selling your original property, which is allowed at Prop 19, the full cash value applies to your eventual sale price of your original home. The transfer then applies at 100%. If you buy your replacement home within the first year of selling your original home, 105% threshold applies, meaning your replacement value is compared to 105% of the original sale value before the blended replacement applies, which means your replacement property's value is compared to a 105% threshold before the blended calculation kicks in. That gives you a small buffer if you're moving up in value. If you buy in the second year after your sale, the threshold increases to 110% of the original sale price, which means your home's replacement value is compared to 110% of the original sales price before the blended calculation kicks in. And critically, after 2 years from the sale date, the transfer window expires completely and you are no longer able to transfer your tax basis to your replacement property. Practically, what does this mean? It means it's less about which year you purchase your home in and more about avoiding a costly gap that's going to increase your property taxes. If you're planning on buying your Oceanside replacement property prior to selling your original home, which a lot of California buyers do in competitive markets, you need to make sure you have the finances to carry both properties and ensure that the Prop 19 timing is working for you. The bottom line is the sequence and timing of buying and selling those properties is less of a logistics question and more of a tax question. Make sure you talk to your CPA before listing your house. The 3-time lifetime limit and what that means for you. Here's something almost no Prop 19 video covers, and it's really important to know. Prop 19 allows you to transfer your base year value up to 3 times in your lifetime. It's not unlimited, it's 3 times. Every time you use it, that's 1 counted against you. There is one exception to that limit. If you've been the victim of a wildfire or natural disaster declared by the governor, you have unlimited transfer abilities. For everybody else, 3 is the ceiling. For most people watching this video, this isn't a concern. You moved to Oceanside and you've used up 1 of your 3. You'll still have 2 remaining should your circumstances change. But for some buyers who've lived in California for a long time and have already transferred in between owned properties, this is a really good question. Under the old rules that proposition replaced, specifically Prop 60, Prop 90, and Prop 110, you were only able to use Prop 19 1 time in your lifetime. So if you used your benefit prior to April 1st, 2021, under any of the older propositions, again, Prop 60, 90, or 110, that does not count towards your 3 uses under Prop 19. The Prop 19 clock starts fresh regardless of whether you already used it under the previous propositions. However, if you have used the Prop 19 benefit once, you have 2 left. If you've used it twice, you have 1 left. And if you've used it 3 times, your benefit no longer exists and your property is reassessed at the full purchase price. Here's one more detail that catches people off guard and is a huge benefit to those that are married or in a domestic partnership. The 3-use rule is not per household, it's per individual. That means each spouse has their own separate 3-use rule. So essentially, as long as both spouses are over 55 and on title, one spouse can do the first transfer, the other spouse could do the second transfer, and you could continue to flip-flop until you use up to 6 transfers of tax basis. 2 important rules to know. Only one spouse can claim the benefit on each transaction, which means you can't have 2 spouses claiming the benefit on a property. And the claiming spouse must be on title of the property being sold and the replacement property. If your situation involves divorce or separation, it's really important that you talk to a CPA and/or an attorney about how to handle this before you sell your property. The practical takeaway: if there's any possibility you've used your benefit before, make sure you know how much of the remaining benefit you have left. You want to make sure you're planning your sale and your purchase and not getting a very expensive surprise. How the math changes by Oceanside neighborhood. So you know you're moving to Oceanside. You're just not sure which neighborhood is going to give you the most bang for your Prop 19 buck. Let's talk about a few neighborhoods so you can get a feeling on what might be the best decision for you. So looking at South Oceanside, and Fire Mountain, South O median sales price last year was 1.52, Fire Mountain was 1.46. Buyers coming from higher and more expensive valued markets are going to fare better and usually not have a blended calculation when they're looking at their property taxes. But if you're coming from somewhere inland, you're likely going to have a much higher tax bill if you decide to move into one of these neighborhoods. Because if you're selling a home for $800,000 or $900,000 and you're buying a home up to $1.5 million, that's going to be an $800,000 to $900,000 gap, and that gap is going to be a significant increase in the taxes that you have been paying versus what you're going to pay living in these neighborhoods. If you still want to be on the west side and close to the beach, Loma Alta is a great alternative. Median sales price last year was $902,000, about $500,000 to $600,000 less than Fire Mountain and South O. So you may not have any blended calculation, or if you do, it's going to be a much smaller margin. You're only going to be paying property taxes based on potentially $200,000 to $300,000 difference. Now, there are other neighborhoods that you could maximize your Prop 19 benefit. One of them being Rancho Del Oro. Well, Rancho Del Oro is not on the west side of Oceanside. It's a little bit more central and slightly east, depending on where you are. Median sales prices are in the low 800s. So even if you're coming from east of Oceanside in one of the eastern counties, you are likely going to still avoid a blended calculation and maintain your low tax basis. Keep in mind, Rancho Del Oro does have an HOA, and you need to add that in to your calculation. The filing process and what happens after you close. One more thing before we close, and this is really important. The Prop 19 benefit does not transfer automatically. You need to file a form with the San Diego County Assessor's Office, and the form must be filed after you close on your Oceanside home. So it's important to remember the two deadlines. You must purchase a home within 2 years of selling your original property. And secondarily, you must file the form with the county assessor within 3 years of closing on your Oceanside property. You then receive retroactive tax relief, backdating all the way back to your closing date. Don't assume escrow or title are going to do this for you. Make sure you file that form. Talk to your CPA or attorney to make sure you're filing the right form with the assessor. So if you're a California homeowner that is over 55, keep in mind that Prop 19 can save you significant property taxes. It does depend on what your replacement value is and what the original home sale price is. You also have to keep in mind the deadlines for selling your house and from filing the form with the county assessor. If you don't file the deadlines, your new replacement property will be reassessed at its full purchase price. Also, the neighborhood you choose is going to have a drastic effect on whether you're going to be able to transfer your tax basis exactly over, or whether there's going to be a difference that's going to create a more expensive tax basis. Make sure you know how many times you've used this benefit, and make sure that you are filing the form with the county assessor within 3 years of closing on your replacement property. My job in all of this is the real estate side, helping you determine what your original home's sale price could be, helping you navigate the neighborhood markets to determine what is going on and what home values are, and helping you negotiate the sales contract, especially the timing piece. The tax calculation belongs with your CPA, but the real estate side, determining how much of your Prop 19 benefit you're able to use, belongs with me. If you've already decided on Oceanside and you want to know what your Prop 19 tax benefit could look like, please click the link below to schedule a call so we can talk about your unique situation. If you saw this video and you're interested in learning more about the Oceanside neighborhoods I discussed, Fire Mountain, Loma Alta, South O, and Rancho Del Oro, I have neighborhood guides on each of these neighborhoods, and I would love to share it with you if you just click the link below. Lastly, if you came across this video but you're not going to be buying or selling in San Diego, I have a vetted agent process, which means if you're buying or selling in another area of California or outside California entirely, I can connect you with some of the top agents across the country. We'll vet all the agents we know to determine whether they're a good fit for you, and all you have to do is click the link below to get started. Thank you so much for watching. I put out content like this every week. My name is Meihaus. I'm a top agent here in the North County area and a top relocation specialist. I would love to help you find your home here in Oceanside. See you on the next one.